The global economy moves trillions of dollars every single day. Most people assume governments directly control this money, but the reality is far more complex. Behind the visible economy exists a powerful financial system. This system did not appear overnight. It slowly evolved through centuries of banking innovation. Merchants needed ways to move money safely between countries. Banks became the institutions that solved this problem. At first, banks simply stored gold and valuables. People deposited their money for protection and convenience. But banks noticed something interesting over time. Most depositors rarely withdrew all their gold at once. This observation changed the financial world forever. Banks realized they could lend part of the deposited money. The original depositors still believed their gold was stored safely. Meanwhile, the bank issued loans using the same money. This process became known as fractional banking. A single deposit could support multiple loans. New economic activities suddenly became possible. Businesses expanded and trade accelerated. But this system created a new problem. If too many people demanded their money at once, banks could collapse. History is full of financial panics triggered by this fear. Entire economies were sometimes destabilized overnight. To solve this instability, another institution emerged. Central banks were created to stabilize national financial systems. They acted as lenders of last resort during crises, and they began influencing the cost of borrowing money. Interest rates became one of the most powerful economic tools. Lower rates encouraged borrowing and spending. Higher rates slowed economic activity. Entire business cycles began responding to these decisions. Over time, the system expanded beyond national borders. Banks, corporations, and investors began operating globally. Capital started flowing wherever opportunities appeared. Financial markets connected nearly every economy on Earth. This global network now moves unimaginable amounts of money. Currencies trade constantly across international markets. Investment funds allocate trillions into companies and governments. Credit expands and contracts depending on economic conditions. Yet most people interact with this system only through simple experiences. A mortgage for a house. A loan for education or business. A credit card used for everyday purchases. Behind those ordinary transactions lies an enormous financial engine. Banks create credit. Central banks influence liquidity. Global markets distribute capital. The system functions like a giant circulation network. Money flows through banks, businesses, and governments. Economic growth depends on the speed and stability of this circulation. When the flow slows, economies often struggle, but the system also carries risks. Too much credit can inflate financial bubbles. Too little credit can trigger economic stagnation. Balancing this flow has become one of the biggest challenges in modern finance. Financial crises often reveal the system's hidden complexity. Sudden failures expose connections that were previously invisible. Institutions that seemed unrelated become financially intertwined. Markets react rapidly to restore balance. Despite these risks, the global money system continues expanding. Technology accelerates transactions. Digital payments move funds instantly across borders. Financial markets operate nearly 24 hours a day. 3 lessons emerge from understanding this structure. First, money is not simply printed and spent. It moves through a complex network of credit and institutions. Second, financial systems grow through trust and stability. And third, economic power often follows the flow of capital. The global money system may appear mysterious, but its core mechanisms are built on simple incentives. Banks lend to generate profit. Investors move capital toward opportunity. The result is a constantly evolving financial machine, one that quietly shapes economies, businesses, and personal finances. And once you understand how the system works, you begin to see the economy differently. Because the real question is not only where money exists, it is where money is flowing next. If you enjoy deep finance explanations like this, explore more videos on Wealth Finance 61. Subscribe to the channel and share your thoughts in the comments.